Start your day with It's the Business. Here's Phil Dobbie.
Good morning, it's budget week and Rishi Sunak has been out doing a bit of expectation setting.
What I'm focused on right now is preparing a budget that provides support for people and businesses and families through the remaining stages of this crisis.
Whilst trying to claw back some money. Exactly what will he do this week? We'll look at that today. Plus, 5 shares that are worth considering right now. Like, for example, Lloyds Bank.
Remember, we've now got out of the PPI provisions. They're going back, and Lloyds Bank, which is the one bank that I favour most, the provisions for bad debts are much, much lower than last year's provisions for PPI.
And look who's come out of the woodwork.
We began it together 4 years ago, and it is far from being over.
God help us. It is the 1st of March, 2021. Good morning.
And now, it's the business, making sense of it all with Phil Dobbie.
Well, he's back.
Friends, conservatives, and fellow citizens in this room and all across our country, I stand before you today to declare that the incredible journey we begun together, we went through a journey like nobody else. There's never been a journey like it. There's never been a journey so successful.
Still using the same script.
We began it together 4 years ago, and it is far from being over. We've just started.
Yes, there he is. Trump has started his re-election campaign at the Conservative Party, I should say the Conservative Political Action Conference in Orlando, Florida. He says he won't be starting a new party. It's the Republican Party all the way from him. After all, he fits in nicely. He's white. He's Christian, allegedly, just like practically all of the GOP, even though white Christians now only make up 88% of the US population, which is possibly part of the problem that they've got there. But those values at the conference remain unwavering. This is a survey that was taken of people attending. 89% said the Confederate flag signals pride, not racism. 83% call police killings of blacks isolated incidents. 68% say COVID deaths have been exaggerated. Oh, he's only a bit dead. And 60% agree we may have to use force to save the US way of life. And these are people who have guns to help protect that way of life. More than one gun each. Guns that killed 41,000 Americans last year. This year, well, it's got off to a slow start. Just 3,000 so far in the first couple of months. But it does pick up as the summer heat turns everyone completely gaga. Yesterday here, 144 new fatalities from COVID-19. The previous Sunday it was 215. So we are heading the right way. New cases, 6,035, down from 9,844 last Sunday. All the numbers are heading down. And over 20 million people have been vaccinated. Here is Matt Hancock speaking from his downstairs loo with that fake sincerity that he hasn't quite mastered yet, although he does smile, which is what he's doing here, better than he fakes his crying.
I want to thank every single person who's come forward to get the jab, because we know with increasing confidence that the jab protects you, it protects your community, and it also is the route out of this for all of us.
Yeah, and we certainly want to see the route out of this, don't we? By the way, talking about lockdown, I've got the same problem as Eamon Holmes. And we're both middle-aged men and we're prepared to talk about it. And not only do we both need to shed a few pounds, and not only have we both clearly married someone rather better than our looks and personality would suggest, but also today, he's got a problem that whenever he writes the word lockdown, his spell checker kicks in and changes it to lick down. I've been having the same problem. I have been in lick down for months, which can be pleasant to start with, but after a while it just gets irritating. But look, I hate to be a doomsayer, but talking about this route out of the lick down, I wonder if it could all go wrong in the first breath, because next week the schools go back. I'm looking at data from the Office for National Statistics that shows that school years 7 to 11, the number testing positive to the coronavirus is down to about 0.5%. Which is better than those just out of school and up to the age of 24, where it's 0.8%, and slightly better than people older than that, where it's about 0.6%. Those ratios have really gone down. Those percentages, I should say, have really gone down since we've been in lockdown. So that's mid to late February. Go back to the beginning of January, and we're not at a 0.5% rate for years 7 to 11 at school. It was 2.3%, higher than anyone over the age of 25. It came down because kids weren't going back to school. Go back to the week before Christmas. Year 7 to 11 were testing at around 3.7% compared to around 2.5% for those aged 25 to 49. It was a lot less for those aged over 50. So we're sending kids back to school because they've got a positivity rate of 0.5%. But when they were at school, it was 3.7%. Now, I am not the scientist here, so I assume they know what they're doing. But doesn't it mean if the schools go back and they start pushing that infection rate up and then we're going to find the whole lockdown schedule slows? And if that happens, maybe we'll see the school decision reversed. Can you imagine what that's going to do to the economy or the psychology of the nation? We will all be going back into lickdown. As I say, I hope they know what they're doing. And then, just to add to the problems, there were pictures over the weekend. It was lovely and sunny, so more pictures of people ignoring social distancing on the seafront at South Sea. And I'm sure it was the same everywhere else at our world-class seaside resorts, the envy of the world, for their gleaming white sandy beaches. But when you've got no choice, that's where you go. And then, of course, to add to it all, and I don't want to be the doomsayer, we've got the Brazil variant now found. 6 cases have been found in the UK, and they reckon this one is more virulent, and the stab in the arm doesn't do a great deal for it. But look, Johnson & Johnson, they've got a new vaccine out. It's been adopted by the United States. I wonder, the Johnson & Johnson, I wonder whether it has to be applied with cotton buds, Johnson & Johnson cotton buds, perhaps. Just as the Pfizer vaccine, I often wondered whether, as an added bonus for men, if you take the Pfizer vaccine, it stops you rolling out of bed at night. Now, it is budget week. Rishi Sunak is going to unveil all middle of the week.
What I'm focused on right now is preparing a budget that provides support for people and businesses and families through the remaining stages of this crisis, is honest and levels with people about the challenges in our public finances, and also talks about the future economy that we're trying to build.
There was Rishi on Andrew Marr on the BBC yesterday wanting to say that he's going to get spending under control whilst spending more. It's a difficult one, isn't it? And in this bizarre alternate universe in which we now live, the Tory party is talking about raising corporate tax whilst the Labour Party doesn't support the idea. A Labour Party that doesn't want to raise taxes on businesses to provide services for the public. Hello?
And I would be concerned about additional taxes on business right now, particularly if there aren't changes to allowances, etc. This is currently really clamping down on business confidence, on confidence in our recovery, and it's not what any other country is doing right now. Yet our country's had the worst economic crisis of any major economy.
Shadow Chancellor Annalise Dodds not quite getting it, I think, that corporate tax is a tax on profits. So if you've been doing badly through the pandemic, you don't have to worry about it because you're not going to be paying that tax. If you made less, that's fine, or loss. But if you've been doing okay, then you will get taxed more. What's wrong with that? Although, it is going to be a drop in the ocean, though, isn't it? In getting the budget back into balance anytime soon. That's not going to happen till, I don't know, the next ice age, perhaps. But hey, Rishi is there. He's going to help home buyers. That'll fix the problem, won't it? He's going to support banks to provide 95% loans on houses, even though we know the effect of that is to push up house prices, leaving people saddled with more debt. Exactly the wrong thing to do, I would have thought. But, I am trying to like Rishi Sunak. Honest, he's not making it easy for me. I mean, helping people buy homes in a pandemic, is that really our priority? Was the stamp duty holiday really necessary, given house prices were sort of doing okay? Eat out to help out, which was shown to contribute to the resurgence of the virus. I am trying to like him. Anyway, we will be analysing the budgets. The Saturday Economist, John Ashcroft, will be analysing the budget on Thursday morning's edition of It's the Business. And tomorrow, Callum Pickering, senior economist at Berenberg Bank, will be joining me to talk about the volatility that we're seeing in the global markets right now. Bond yields shooting up on Thursday all around the world, really, then falling back on Friday. And we finished with the markets in a bit of a disarray on Friday. We saw equities or shares, the stock market in the US, pretty much falling everywhere. We've seen commodities, the price of oil falling down. Who knows where bonds are going to go next? If the news is too good, then people start bailing out of government bonds because they think, let's take risks. And that's pushing yields up. So central banks then buy more of those bonds because they're concerned about the yields going up, whilst governments issue more of them as well. At the same time, we've got Joe Biden's $1.9 trillion stimulus package now heading to the Senate this week in the United States. Now, it's likely that the component that lifts the minimum wage up to $15 will be dropped from that, but it's still going to be $1.5 trillion. Which is going to need to be funded. And that means more bonds being issued and probably more being bought by the central bank. What is all this going to do for inflation fears? Something else that's been pushing bond yields higher, which could ultimately raise the cost of borrowing. Now, modern monetary theorists would say, well, why issue the bonds in the first place? Why not just have a massive overdraft in the central bank for these governments? Well, it's a good question. I mean, this story is far from over, isn't it? So we'll talk about that with Callum Pickering tomorrow on the programme about how governments and central banks manage this huge demand for money right now. Well, after Friday's podcast with Jasmine Birtles, you might be thinking harder about investing a bit of the money you've got in stocks and shares, perhaps in a stocks and shares ISA, to get returns without having to pay capital gains tax up to a point. But what to invest in? You can, of course, just get a managed fund, or you can do it yourself, or maybe you want to do a bit of both. And we are seeing more and more people now playing the retail markets. The FT reporting over the weekend that in Germany, for example, the number of people who own shares directly or via funds has risen from 2.2 million to 12.4 million people last year. The sharpest rise was in the under 30s. Now it's just in Germany. I'm sure it is the same everywhere else. More people than ever are playing the stock markets. And at the same time, we do have this rising question mark over investing in government bonds. They have been losing value quite a bit last week over concerns that too many are being issued, and inflation might be just around the corner, which will devalue those bonds because they are, just like holding cash, except they do pay a bit of interest. Not much lately, it's fair to say. So maybe now is the time to dabble in the share market if you're not doing it already. You should, of course, seek advice from a professional financial advisor rather than just taking our word for it as to what you should be investing in. But to help you head in the right direction, let's catch up with Rodney Hobson, who has been at this game for a long time, it's fair to say, and he's written many books on the subject and always has something useful to say, which is why we keep inviting him back onto It's the Business. So today, 5 shares to consider. Let's look at that this morning, Rodney. And let's start with banks. A big question mark over this one. I mean, I'm sure you're right, but given all the dangers of toxic debt from the banking sector, the fact that there's low interest rates, which is surely making it hard for them to make a quid, although banks always do seem to manage somehow to make money, don't they, whatever the situation?
That's absolutely it. I think every portfolio should have a bank because somehow or other the banks come bouncing back. This pandemic has been quite different from the financial crash of 2008 when the banks were right at the center of it. And certainly in the interim period, we have had banks shoring up their portfolio, their reserves, forced to do by governments, but quite rightly so. Banks do, I'm afraid, yes, the downside is they seem to have a great propensity to shooting themselves in the foot. And yes, we are likely to get now provisions for bad debts. But remember, we've now got out of the PPI provisions. They're going back. And Lloyds Bank, which is the one bank that I favour most, Lloyds Bank, for example, the provisions for bad debts are much, much lower than last provisions for PPI. So I think provisions are going down. I think that doesn't matter too much. You mentioned inflation. Inflation will bring rising interest rates. They are historically low, and I think we're going to have rising interest rates. Banks tend to do better as interest rates rise because they can get a better spread between the charge that they charge you to lend to you and the amount they pay you on your savings. So that should help.
The central banks, of course, are saying that interest rates are not going to rise for years yet, and yet you look at the markets, and it doesn't seem like many people believe them. I mean, almost certainly not this year, but perhaps next year. So now's the time to get in, I guess.
I will admit I have form in this, and it's bad form. I have been saying for about the past 10 years, interest rates can't stay historically low. They're going to have to rise someday, and I'll keep saying it because someday I'm going to be right. It hasn't happened so far. But you talk about interest rates rising on government bonds. It's going to push up interest rates across the board. It's all very well central banks. Central banks used to set interest rates effectively by their own, what we call the base rate here. But base rate since the 2008 crash has got quite detached from the realities of the marketplace. And I think the marketplace will dictate rising interest rates, whatever the central banks say.
Are banks paying dividends now? I guess that's the good. I mean, they are a good stable. I mean, the banks aren't going to collapse. Well, they have, of course, but it's very unlikely. So they're a good stable one to have because they're going to be paying. They're going to be paying you dividends.
That is very important. Last year in the UK, the government forbade banks from paying a dividend, so that cash has all been stored up. I think that was sensible to hold that cash back, but it does mean that the banks have got plenty of cash on their books. They can afford to pay a dividend, and they can afford to cover the costs of the provisions that are being made. So I think that dividends are coming back. If you don't, just coming back to Lloyds Bank, if you don't go for Lloyds, I would have considered HSBC. I own shares in both. My big worry about HSBC is that China's getting a lot of flack over the treatment of Hong Kong and about the Uyghurs. So it may be that people in the West will start turning away from HSBC, and it is caught really between the two stools. Nonetheless, I think we shall start putting our own interests before those of the minorities in China, and we'll carry on doing business with China. But it's a worry. So because of that reason, I've picked Lloyds Bank. Their shares have been struggling since December to break above 40p, but they about 39p now. They were 70p 2 or 3 years ago, and in my view, that's where they should get back to.
Right. Okay. Excellent. Number 2, DS Smith. So this is a packaging firm. I can see the logic here because we are getting so much stuff shipped to us, and it must be an immense amount of packaging that's happening now. And I'm sure so in the online space particularly, I can see there's going to be more demand for this.
Yes, so the shares have recovered to around 400p, which is where they were before the pandemic struck. But I think that doesn't reflect the quality of this business. As you say, packaging has been big demand. And the thing is that it's plastic packaging that's taking all the flack. DS Smith is into cardboard, and that's where all the movement is going to be. And it seems to me that we're going to need packaging. Even if we go back to high street shopping, things have got to get to the high street in packaging. Doesn't use as much as sending out things out by mail. But I think online orders are here to stay. Royal Mail reported more packages going through at Christmas than any Christmas previously. I mean, it's cards and letters that are going down, but packaging is in the ascendancy. I bought DS Smith fairly recently, last year, when the shares were depressed, and I thought they would bounce back, and they have done. They haven't bounced back as far as I was hoping. They're around 400p now. They were 560p 2.5 years ago, so they could recover that. Just one sideline on Smith. There has been talk on Friday about the possibility of a takeover or a merger. I'm discounting that. There's no definite announcement from Smith. And Monday, the company that's supposed to be making the bid has refused to comment. So I'm not counting on any bid. In fact, I'd rather there wasn't one. I'd rather Smith carried on because I think its prospects of an independent company are so good. So buy on the quality of the stock and not on takeover hopes.
And they are very big on recycling and sustainability, looking at their website. So, you know, it's a good ethical investment as well. Reckitt Benckiser, of course, a juggernaut, aren't they, who make debt Metal, the Vanish Stain Remover, Dispirin, lots of products related to our home and our health. And I guess we're spending more time at home and we're more concerned about our health. So this seems like a logical one.
Yes, they've had a good pandemic as far as the results are concerned, and my wife Judy, who is a health writer, assures me that people will carry on washing their hands after the pandemic is over. So I think there's a lot further to go. I agree, hand washing's here to stay. I prefer hand washing to hand wringing. And Beckett's really solid profits, and the dividend is solid.
Yeah.
It bounced. It's curious. It was one of the few shares to really bounce back strongly after the slump in share prices 12 months ago, and it ran all the way up to £77 the share price. But since July, the shares have been falling back again remorselessly. Now, it was one of only 3 FTSE 100 shares to actually gain on Friday when we had a bit of market carnage. But even so, the shares are only about £60, and we should be thinking about them rising again. So they were £65 before the crashes, so they're still now below the pre-pandemic level. And you think a company that benefits from the pandemic really ought to be doing better. Now, this is the one of the 5 shares that I don't own myself, but I must say I'm thinking of making this my last purchase of the current financial year, as I've just got some ISA allowance to use up, so I'm thinking I might move now.
Right. And look, they also make Durex, so anyone who's had kids at home for so long over the pandemic and thinking we don't want any more of them, maybe they'll do one like that as well. Barrett Developments, you don't have to comment on that. Barrett Developments, let's move on. So housing, I mean, Rishi Sunak indicated, didn't he, last week that there's going to be, well, they're going to back 95% loans again to try and get more people into the housing market, more first-time buyers. So, but, you know, we know there's always a demand. I mean, the demand for housing, if we look just even from 2008, when there was a bit of a lull after the financial crisis, I mean, housing starts have been steadily upwards in this country and around the world, really. I mean, they did tip back, obviously, early last year, but bounced back fairly quickly as well and is really now back on trend.
Yes, as with banks, I think every portfolio should have a house builder in it. Now, you mentioned the help that Rishi Sunak's giving, the stamp duty holiday, and the possibility of helping first-time buyers. The great point about helping first-time buyers, and I'm glad I'm not one, is that it's not the first-time buyers you really help. It's the people who are selling houses to first-time buyers who you help, and that includes the house builders themselves. So all the it pushes the house price up. I mean, we've seen this. Pushes the price up, yes. Yeah. In the end, you're actually saddling the first-time buyer with more debt in a way because they're having to pay more to get in the house, whereas the people at the bottom
You see
end
that.
of the market,
I see that. Millions of people all over the world see that. Sadly, our Chancellor, our Treasurer, doesn't seem to get it. I don't understand why.
It's politically attractive to help first-time buyers. It makes good headlines,
it doesn't work.
People like it. It wins votes. So
anyway, that aside, your point. Maybe it does or it doesn't if we all see through it. But anyway, your point is if we're doing it, it's going to push prices up. That's going to be good for developers. So get in there.
We still have a shortage of homes, and as with banks, dividends are being restored. Now, first-time buyers of shares rather than houses might consider just about any house builder. I think most of them were pretty good value at the moment. Or you could even look at the wider construction sector and consider which companies are likely to benefit from infrastructure spending. Yeah. But I had to pick one share, and I picked the one that has been the best performer in my whole portfolio, and that's Barrett Developments. Its shares are about 4 times what I paid for them, but that was back in 2009, right at the bottom of the market. I think there are still some further recovery prospects in Barrett Developments.
Yeah, not in commercial real estate, though. I think that's going to be a dicey area for a few years.
Well, if you're looking at real estate, be very, very careful. If you're looking at shopping malls, stay well clear. Warehouses and office space is probably also difficult. Office space is difficult because people may not go back to work. Warehouses is probably the best bit of real estate. Yes, I'm very dubious about real estate altogether.
Now,
I'd rather be a house builder.
Absolutely. Now, we all need somewhere to live. We don't necessarily need to go to work. The Royal Dutch Shell is another one of your final suggestions. Really, oil? I mean, prices are up for oil. They are back to where they were before the pandemic. But I mean, before that, even before this happened, I mean, oil company BP in particular were forecasting a big downward trend. But you think there's still money in oil, still money to be made?
I think there is at this stage. Having pushed DS Smith as being highly ethical, perhaps I can be excused for producing one that isn't really for the ethical investor. But for me, while we're still trying to phase out fossil fuels, the fact is we're still producing cars that run on petrol. We're still using gas in power stations, so oil and gas are going to remain in demand for at least 20 years. Crude prices are rising again. And yes, there's maybe one where you look for a chance to get out again sometime in the future. But that future is going to be, to my mind, at least 10 years off.
Yeah, and I guess the price is regulated to a great extent as well, because it really is. All the oil companies are working as an oligopoly, obviously, aren't they? And if they're concerned about prices dropping too much, then they reduce supply, collectively reduce supply.
Yes, indeed. There is some mechanism there. It's a rather crude mechanism, but yes, there is the chance to drop the output. And one other consideration is that China, where the epidemic seemed to start, is the one that's bouncing back best. And China, I'm afraid, doesn't let environmental considerations get in the way of economic progress. So
why Shell and not BP?
BP worries me because it still has a heavy involvement in Russia, which I don't like. Joint ventures there are likely to end up in tears if you don't stay on the right side of Putin. So I'm just nervous about BP. So the two big ones, two British big ones, I much prefer Shell. Just a warning for first-time buyers, buy the B shares, not the A shares. Shell has a rather odd structure. The B shares are for the UK buyers, and the A shares are for the Dutch investors of this Anglo-Dutch company. It's purely for tax reasons. There's nothing nefarious about this. It's purely for tax reasons. The UK investors buy the B shares.
Okay, so Lloyds, DS Smith, Reckitt Benckiser, Barrett Developments, and Royal Dutch Shell. They're your five. Look, this has been great. We'll do it again. And look, we're going to hold you to this. We're going to come back and have a look and see how they're all doing in a few weeks. But
okay.
We'll hold you to it. I want you to tell us your past performance. Right now, what out of the shares you're holding, what are actually gaining, what's losing, and what are holding steady, but you're doing okay on the dividends from them? What would the mix be roughly, ballpark?
Mix at the moment. Well, since we've done the recovery, I would say more than half are now ahead on my price. Those companies that I bought in 2009, 2010, 2011 are all well ahead. The ones I bought more recently, of course, are the ones that have fallen back more. But on the whole, I would say that pretty well the whole portfolio is about broken even. There's perhaps 2 or 3 shares that are down. Out of about, I think I've got 17 or 18 shares in the portfolio. Okay. I would say so. Half are ahead, and then about a quarter have broken even if you put in the dividends, and about a quarter are down. But you're always going to have some shares that fall back. Don't beat yourself up if you buy shares and 1 or 2 drop back.
Absolutely.
As long as you're ahead overall, and I am, that's all that matters.
All that matters. Absolutely. Look, that's been great, and look, I've enjoyed doing it as well. It's been fun doing it. We'll get you back on in a couple of weeks. Thanks for your time today, Rodney.
Okay.
And look, quickly before we go, the major stories in the papers this morning. The Times: vaccinations pass 20 million, but Brazilian variant is found in Britain. That's the front page of quite a few newspapers this morning. Also on the front page of the Times: people smugglers will be jailed for life, vows Patel. Well, if you can get 10 years for lying about where you went on holiday, then that's the least you can do. I mean, and why not bring back public lashings at the same time while you're at it? And you want to, pretty, don't you? The Brazilian strain is also the front page of the Eye. Mutant Brazil strain in UK. Race to stop infection. The Daily Telegraph also. Hunt for UK patient with Brazil mutation. They're trying to find out who's spreading it. The P2 variant, it's called, which is less responsive to the vaccine. The Brazilian variant is known to have come into the country on a plane from, guess where? Brazil, yes. Just before the lockdown and the hotel quarantines. In fact, The Guardian has the same story. Alarm over border delays as new Brazil variant enters the UK. Also in the papers this morning, use it or lose it is the front page of the Metro. Yeah, I'm with them on this. We've got 80% of the EU's 6.1 million AstraZeneca jabs are sitting unused in stockpiles. And a large part of this is because a lot of Europe, particularly in France, where Monsieur Macron has said it's not effective for the over 65s. In fact, they stopped giving it to the over 65s. They've reversed their decision on that now. But that's created this lack of confidence in the AstraZeneca virus. So, look, the point in the Metro is if you're not going to use it, then there are a whole load of poorer countries wanting to receive just one dose. So, if you're not using it, don't chuck it away. Send it off to those countries. The Financial Times. EU leaders talk up AstraZeneca jab in an effort to spare inoculations because it really is moving very, very slowly on the continent. We are well ahead of them, that's for sure. The Independent. Labour warns of triple hammer blow in budget. They're saying that, look, if they cut taxes, raise taxes, I should say, cut welfare, or freeze public sector pay in the budget on Wednesday, then that is going to be a triple hammer blow that could undermine the UK's recovery from the coronavirus. The Justice in Retreat is the front page of the Daily Mail. Half of British police stations close in just 10 years. This is a damning Mail investigation. But look, the big story that we should all be concerned about, and this is definitely a case that we have been in lockdown or licked down for way too long. The Daily Star today. Heavens to Betsy, no! And they've got a picture of someone wearing sandals with socks on. That is a sign that we've been living on our own, not out in polite company, and we feel like we can get away with it. Fashionistas say these are cool again. The Daily Star. And how can that be? That's just shocking news, isn't it? That's it for today. Back again tomorrow. Enjoy your Monday. I'm Phil Dobbie. See you then.
It's the Business with Phil Dobbie. Listen online at itsthe.business or wherever good podcasts are found.